All right, let's dive in. We're looking at Vinati Organics today. They're an Indian chemical manufacturer listed on, well, both the Bombay Stock Exchange and the National Stock Exchange of India. And we got their Q3 FY25 financials, and they're making a pretty big move.
Yeah, they're putting up good numbers and going for some serious international growth. Not something you see every day.
Totally. And that's what we're going to figure out today, beyond the headlines, right? Like, what do these numbers tell us about Vinati, and what does this U.S. thing mean for them down the line? You ready?
Definitely. Let's start with those top line numbers, shall we? So Vinati Organics reported a consolidated revenue of Rs 521.68 crore for Q3 FY25. That's a big jump from Rs 447.99 crore same time last year. Standalone revenue for the quarter landed at Rs 521.67 crore, up from 447.99 crore.
So consistent growth all around. But what I really want to know is what's driving it? Where is all that growth coming from?
Well, one thing to remember is Vinati Organics pretty much operates in one business, manufacturing of chemicals. That focus could be, a big part of their success. They're really good at what they do.
That makes a lot of sense. And it makes their profitability even more impressive, right? Their consolidated profit after tax for Q3 FY25 was, get this, Rs 93.70 crore. That's up from Rs 76.94 crore, same quarter last year. And you can see that in their EPS for Q3 too. It jumped quite a bit. But profit's not just revenue, is it? What can we see in those expenses?
You got it. And if we look at their expenses, one thing that stands out is the cost of materials. It's gone up, both year over year and compared to last quarter. What do you think about that?
It makes me think they're dealing with the same supply chain stuff and those raw material prices that everyone's talking about. But their profitability doesn't seem to be hurting that much. Maybe they're managing it well.
It's possible. Another interesting bit is the change in inventories. Q3 FY25 was positive Rs, 9.74 crore. But the quarter before, it was negative Rs, 14.22 crore. What do you think caused that?
Well, maybe they're ramping up production because they expect higher demand, maybe even for that U.S. expansion. Like they're making sure they have enough, to really launch strong.
That's a sharp observation. It definitely looks like they're thinking ahead. That proactive approach fits with their growth strategy. Now, there's this small item, other income,
Right.
but it caught my eye.
Oh, yeah, that's a good one. It includes a Rs 10.66 crore interest income. On income tax they recovered. They had over-provisioned in a previous year.
Exactly. Basically, they thought they'd owe more taxes than they did, got some back, and because it was a decent chunk of change, it earned some interest. It just shows how even a tiny detail can tell you something interesting about how a company handles its money.
It's those details that really matter, right? Now let's talk about that big news, that move you mentioned.
Okay, so you've seen those strong Q3 numbers, right?
Yeah.
Well, that's probably what's allowing Vinati to do this. They're setting up a wholly owned subsidiary in the U.S. Their board just approved it.
Wow, that's major. Expanding to the U.S. is a huge sign of their ambitions. Breaking into a new market is never easy, but they seem like they're in a good spot to do this. What do we know about this U.S. venture?
Well, the filing tells us the subsidiary will be in Delaware, known for being business friendly. They're planning to invest up to $500,000 US initially. And the main goals are to make and sell, their current products in the U.S. market. But they also want to look at new business opportunities.
So they're not just testing the waters, they're jumping right in, huh? Bringing their products and looking for even more they can do. What do you think is the reason for this expansion?
Well, the U.S. market is it's way bigger than India. Potentially way more customers and revenue for Vinati Organics.
And they're doing great financially, so they can invest in this. But going up against established companies in a new market, that's got to be tough. What risks do you see? Could they have trouble breaking into the U.S.?
There will be challenges, definitely. They'll need to figure out the regulations, the whole U.S. market landscape, maybe even tweak their products or strategies.
And the competition will be fierce, right? I mean, there are some big players in the U.S. chemical industry already.
Exactly. It'll be interesting to see how they position themselves, how they make their products stand out.
This could really change things for Vinati Organics. It's bold, it could be hugely rewarding, but there are risks.
Yeah, it'll be fascinating to watch. Can they use their strengths, adapt to the U.S., and handle the competition? That's what we'll see.
Now, before we get too far into those challenges, let's circle back to their financials for a minute. I'm curious about their employee benefits costs. Those went up to Rs 32.60 crore in Q3, FY25 from Rs 30.36 crore. in Q3 FY24. Why do you think that is?
Well, it could mean, Vinati is already hiring more people, getting ready for that U.S. expansion. Shows they're serious about it. It'll be interesting to see if that keeps happening in the next few quarters.
And their power and fuel costs are up too. 37.77 crore in Q3 FY25 compared to ours 31.42 crore last year, same quarter. What's driving that, do you think?
Could be. Could be they're ramping up production, getting ready for that potential demand from the U.S. But it also shows how those global energy prices, they can really affect a company's bottom line. Something to keep an eye on.
Okay, so let's dig deeper into this U.S. expansion. It's a bold move, and I want to hear your thoughts on the potential roadblocks, the challenges for Vinati, entering this new market. What are some of the big ones?
Well, I think one of the toughest things is going to be the whole regulatory landscape in the U.S. The chemical industry, it's heavily regulated. Vinati will need to make sure they're following every single rule, federal and state.
That's a really good point. That can be super complicated and expensive, right? What else? What other challenges do you see?
Understanding the U.S. market, that's another one. Like, what do customers want? How do things get distributed? Who are they competing with? It could be very different from what they're used to in India.
Right, right. They'll have to adjust their whole approach to reach those U.S. customers.
Totally. And they can't forget about the competition. The U.S. chemical industry, it's got some big players. Venati needs to figure out, how to make themselves stand out, find their own space.
Do you think that focusing on specific types of chemicals, could that actually help them, give them an edge?
It could. Yeah, it could. By specializing, they can really focus on, certain parts of the market, become experts in those areas.
They seem to be emphasizing that exploration part of the U.S. expansion too, right? Remember, one of their goals is to look for new business opportunities.
Exactly. It's like they're not just copying and pasting their business, into a new place. They're actively trying to find new ways to grow, to
Yeah.
innovate.
Makes you wonder what they're thinking, right? Could they start making new products or maybe team up with some U.S. companies?
It's definitely possible. Being in the U.S. market, they're going to learn so much about what's trending, what people need, and where they might fit in. This could open a whole new world for them.
It's exciting to think about the kind of innovation this could lead to. But let's go back to their financials for a second.
Sure.
We talked about their inventory management, and I want to dig into that a bit more. We saw that shift from negative to positive in those changes in inventories. Can you talk about why managing inventory well is that so important for a company like Vinati Organics, especially when they're growing like this?
Yeah. Yeah, inventory management, people don't always think about it, but it's crucial for any manufacturer. And for Vinati, especially with this U.S. expansion, finding that right balance it's essential.
What happens if they have like way too much inventory? What are the downsides there?
Well, it ties up money that could be used for other stuff, like research or even more expansion.
And there's that risk of things becoming obsolete, right? If their products expire or if people just stop wanting them, they could be stuck with a warehouse full of stuff they can't sell.
Exactly. But having too little inventory, that's a problem too. They might miss out on sales, disappoint customers, and hurt their reputation if they can't keep up with demand.
So it's like a balancing act. What are the key things they'll need to consider as they manage their inventory going forward?
Demand forecasting is huge. They need to figure out how much they'll sell, both in India and potentially in the US.
And they've got to optimize that whole production process, right? So they can make more or less, depending on demand, without it costing them a fortune.
And let's not forget about suppliers. Having reliable suppliers is key to keeping those inventory levels steady.
And then there's those global supply chain disruptions, right? We've seen a lot of those lately. It adds another layer of complexity.
For sure. It's a moving target. You got to constantly be watching and adjusting.
So while Vinati Organics Q3 FY25 numbers look really strong, their success going forward, it's going to depend on how well they handle these operational challenges.
Their decisions, their efficiency, their ability to adapt, that's what we'll need to watch as they go through this exciting new phase of growth.
Now to wrap things up, let's think about, what this all means for our listener.
Right. If you're following the chemical industry or maybe thinking about investing, Vinati Organics is definitely one to watch.
They're not just, resting on their success in India. They're thinking bigger. They've got a plan.
Their financials are solid, and this whole U.S. expansion thing, it could really boost their growth. But, Got to remember every investment has risks.
And just because they did well in the past doesn't mean it'll, always be smooth sailing. That's why we do this, right? We dig deeper, we go beyond the headlines, we look at all the different factors.
That's it. That's it. We're not just, reading off the numbers. We're trying to understand them.
We looked at their financials, why they're making these decisions, the challenges, the opportunities, the whole picture.
And the most important thing is we're sharing that with you, giving you a better understanding of Vinati Organics
Yeah.
and how they fit into the bigger picture of the chemical industry.
We covered a lot, right? We saw how Vinati Organics is using their strong financial position to go after these ambitious goals.
Yeah. And we also talked about how important it is for them to, run things efficiently, to adapt, to make those smart decisions, especially as they go into this new phase.
But we want to leave you with something to think about. What do you
Yeah,
think
right.
what do you think will be the biggest challenges for Venati Organics as they, enter that US market?
And how will this expansion change the way they innovate, the products they develop down the line?
Yeah.
Those are some of the questions that'll really shape their future.
So keep following their story, keep asking those questions and never stop digging deeper. That's what it's all about. Until next time.